The views expressed in this podcast are not to be taken as either trading nor financial advice. Neither the announcer nor the Sirius Report make any claims to be certified financial advisors, and all reporting is dedicated solely towards being both informative and educational. Welcome everybody. Good afternoon to the Sirius Report Market Wrap-Up for Wednesday, October 23rd, 2024. Well, needless to say, before the open, we had Boeing report, and it wasn't very good. And the equity markets responded in kind to that. But primarily, I think the equity markets are selling off due to what is happening in the bond markets as yields continue to spike, despite the Fed's cutting rates by 50 basis points. We're going to take a look at how these regions fared. We're going to take a look at either a combination of a pullback or a dumping by the COMEX of gold and silver. Cryptocurrencies continue to fall down from a recent high of 69,000 in Bitcoin. And we're going to take a look at a couple of different pieces of information on the side. So with that in mind, let's go ahead and jump right in and see how the markets fared. The Dow was at one time down 650 points. It ended up down 409 points to close the trading session at 42,514. Meanwhile, the Nasdaq was down 296 points, closing out at 18,276, and the S&P 500 was down 53.78 points at 5797. In the bond markets, except for the 1 month and 2 month, everything on the yield curve shot up higher. The 10-year was up just a touch, but closed out the trading session at 4.246, and the 2 years at 4.082, getting a little bit inverting with the 10-year. In the dollar markets, well, the dollar in relation to the Western currencies continues to strengthen, especially after we had a recent cut in the ECB, and we had another cut from, I forget which bank earlier this morning. The dollar was up 34 cents to 104.41, while gold and silver got beaten like a dog. Silver was down $1.15 to close out the trading session at $33.77, and gold was down $33.60 to close out at $27.15. Now, silver did get as low as $33.38, which would have been, let's see, another 29, down about 140, but it recovered in the afternoon session. Gold was down to 27.07 and climbed up a little bit itself. So we'll see if there's 2 days in a row of this. Usually every pullback has been met with heavy buying, but the fact of the matter is also we had some big heavy days that saw COMEX December silver get over $35 an ounce yesterday, and so it was only reasonable and logical that we would have a big pullback, as there was profit taking, there was short selling trying to cover, as well as what we probably have as a technical resistance level at 35. In the cryptocurrency sphere, Bitcoin was down let me go ahead and refresh the last 30 minutes here. Okay, Bitcoin, the last 24 hours of trading was down at 1.27% at 66,534, while Ethereum was down 4.39% to close out the last 24 hours trading at 2505. In the oil markets, a little bit of a sell-off today. WTI crude was down 97 cents to $70.77 a barrel, while Brent crude was down 76 cents, closing out the trading session at 75.28. One piece of economic data today, we've got quite a few that are coming in tomorrow. U.S. existing home sales slumped to the lowest since 2010, the midst of the Great Recession. Existing home sales disappointed in September, declining 1% month over month versus expectations of half that. August 2.5% month-over-month drop was revised up to 2% month-over-month drop, but still left existing home sales down 3.5% for the year. Total sales annually in the United States dropped 3.84 million, the lowest since 2010. Now, why did the Fed cut rates? Well, one of the things that was alluded to by Chairman Powell in the FOMC meeting from last month was what they were seeing in the Beige Book. And what that was that we are now finding out, because the Beige Book actually was reported today, the economic activity on balance was little changed in nearly every district since early September. Though 2 districts reported modest growth, most of the districts declined manufacturing activity. And we have seen this in the Philly Fed, in the Atlanta Fed, in the Kansas City Fed. All of these different places have been below 50, which shows declining economic activity, and especially districts that are tied to manufacturing, which is even worse. Well, another sign that we are still long into the recession, restaurant bankruptcies are piling up, with TGI Fridays possibly being next. TGI Fridays executives have been in multiple discussions with lenders searching for a loan to ensure operations run smoothly through a Chapter 11 process. Those who were in the know said Ropes and Gray LLP lawyers are advising TGI Fridays on their bankruptcy, but noted plans have not been finalized. So TGI Fridays won the big. This is a list of the recent bankruptcies for the year: Red Lobster, Rubio's, Melt Bar and Grill, Kuma Holdings, Tijuana Flats, Sticky's Finger Joint, and Boxer Ramen. Finally, the last thing we're going to take a look at, it appears that the IRS has finalized their new federal income tax brackets and have increased the standard deduction. Single taxpayers making over $636,350 or couples making over $751,600 will be subject to a 37% tax rate. That's up from $609,000, so an increase of $17,000 to move into that level, and $20,000 if you're married. The bottom line is 10% tax for singles with incomes of $11,925 or less. Married couples $23,850, but you're really not going to pay taxes when your standard deduction moves up for individuals by $400 to $15,000, and married couples double that to $30,000. Anyway, like I said, not much really going on today. We're going to have a lot more economic news reported tomorrow, so look forward to that. I want to thank everybody, as always, for being a part of the Sirius Report community and for your market wrap-ups in the afternoon. Don't forget to subscribe, like, share, comment, send this out to anybody you think might be important. And until the next time we get together, have a great Wednesday.